And with inflationary effects of high oil prices, has been playing a little hide and seek when it comes to consumer staples. Let's bring in Nik Modi. He's RBC co-head of global consumer and retail. Nik, it's good to see you. I mean, the question for the public is, are food prices going up? And from that very simple point of view, what would you say?
Yeah, I would say that if this sustains, they're going to go up. The reality is a lot of these companies have contracts that hedge them effectively 6 to 9 months. So, if this thing continues to persist and fertilizer costs remain high, and again, like you said, the Middle East is, 35–40% of fertilizer exports, it's gonna cause a problem. Now, the reality is, Kelly, in the near term, the real consumer impact in the U.S. is going to be more about, energy costs going up, right? Because that's more immediate.
Yes.
The consumer
Yes.
feels that right away. Home energy bills and gas prices, that is the more immediate issue. Now, if this sustains itself and the costs go up, there's going to be a lot less latitude to take pricing than what we've seen in prior cycles where this has happened.
And I think this is important, which is, there might be some comfort taken in the fact, and we spoke with an analyst about this the other day, who said, look, you're not seeing crop prices go up yet. So right now, unfortunately, the squeeze is on the farmers, for instance. It could end up being on consumer staples companies where, and you see those with them down 5% since the war broke out. If consumers are under pressure, they're buying less, they can't pass along price hikes, even if they do experience them. That seems to be directionally what you're talking about. Who do you think is most vulnerable?
Yeah, I mean, I think when you think about the packaged food stocks, they are certainly in the crosshairs here, mainly because they're feeling the volume pressure already. There is less pricing latitude for them. And so I think that they're probably going to be most at risk. Names that we think are kind of more protected, Primo Brands, they're U.S.-centric only. In fact, they compete against a lot of imports, right? They're completely domestic produced. So any issues with products getting here from overseas, I think benefits them. It's also a very cheap stock, and they're kind of in the midst of a turnaround, which seems to be going well. And then Church & Dwight is another name that we like. They have a big value end of their portfolio. They've gotten rid of some businesses that have really been a drag on their top line, and they have a lot of dry powder for M&A, which could create some upside in a pretty tough environment. What is
Primo? Is that the protein bar, or am I thinking of the wrong company?
Yeah, no, Primo Brands is the biggest home and office water delivery business. They purchased the Nestle water assets, so they also have a big retail business with Poland Spring, Saratoga, Mountain Valley on the premium end.
Oh, I see. Okay, that's fascinating. So you mentioned from a supply chain perspective, companies that would have exposure to a pressured consumer, could include Spectrum, Newell Brands, Traeger, Kenvue, Smucker. I mean, I just want you to get a little bit more color on this risk of margin pressure from logistics costs. That's another thing to think about. Could be Reynolds, again, Traeger, Newell, Spectrum. So, there are a few names here, including ones with exposure to the Middle East, like Pepsi, Mondelez, Coke, and Procter & Gamble. So it does sound like if you're in the consumer staples sector, which had been the third best performer in the entire market, more or less until this broke out, does it suddenly go to the bottom of the pack?
Yeah, I mean, look, let's put some context around it. Staples have been a pretty poor performer before coming into this year. They took too much pricing. Volumes really started to lag, and the space has not been a very good place to be investing. On the year, when we began the year, this whole concern over the AI trade really had people just flooding and going into defensive spaces. So the reality is the sell-off that we've seen in the last week or two has really been kind of the starting point was, I would say, artificially high because the fundamentals have not improved, yet the stocks had an incredible start to the year. So the reality for us is, every one of my stocks is going to get impacted. There's no question. Some will be impacted less than others. That's what I highlighted to you earlier. And so it's really going to be kind of a stock picker's game in this sector for this year.